Hello traders, welcome to Quantsapp. This is Dharminder Rajbar. Today we are going to discuss how to select the right strike while taking the option trading. Okay, whether you should select the OTM, ITM or ATM level, we will discuss it today. Okay, first we will discuss how traders choose the strike and how they make profit and how they make losses. All right, and what are the various strategies which we can use the and how we will study that how to use this option strikes, okay, whether ATM, OTM and the ITM in the option strategies. All right, let's go and discuss. Okay, all right. So there are various option strikes. Okay, so let me show you. Okay, so we have OTM, we have ATM, we have ITM. Okay, so here for call options I am showing you. All right, for call options and put option both. Okay, let me show you call and put both. All right, so if you are an option buyer, let's just say if you are going to buy the naked position, okay, naked position. So most of the buyers, what they do, they buy heavily over here. Okay, let me show you. They buy heavy quantity at the OTM strike. Okay, what they think that this is cheaper. Okay, so if I buy huge quantity, if there is a slight movement in the OTM option, I can book the profit. Okay, I can book the profit. Then again, if there is any chances, I will take the trade in the OTM level. Okay, so most of the traders, they buy heavy quantity at the OTM strike because these are cheaper options. Okay, so here moderate quantity, because it is reasonable, or I can say it is more, the price is fair. Okay, moderately fair. This is expensive. So they don't buy huge quantity. They don't buy huge quantity at the ATM or ITM strike. Okay, the reason is same. These options are expensive and OTM are less expensive, or I can say it is cheaper. All right. So first, let me show you. Okay, let me show you how it will affect the momentum, and then how we can take the trade according to that. All right. So I'll go to track and I'll select option chain. Okay, so this is the Nifty. Right now it is quoting as 24,830. So the spot will be considered as 24,850. Okay, now look at the premium of the call option at the ATM and OTM level. Okay, ATM, ITM and OTM level, and the put options. Okay, so let me show you. Okay, how it will affect. Here you can see at the ATM level. Okay, this is 24,850. The premium of the call option is around 143. Okay, at the OTM, okay, that means out of the strike. Okay, when the strike is greater than the spot, the premium is reduced. You can see it is quoting at 98, and another level it is quoting at 79.95. Okay, that is why the OTM strike are known as the cheaper strike. Okay, at the ITM level you can say the premiums are high. Okay, similarly it goes to put also. Okay, put also, when the strike is below the spot, below the fair price right now, it will be considered as OTM. And when the price is above, okay, when the price is above the fair price, above the spot, it will be known as ITM for put. Okay, exactly opposite of the call option. Okay, it will be known as ITM, it will be known as OTM. All right, so you can see this is the difference between ITM and OTM. In OTM the price are also always cheaper, in the ITM price are always, you can see, expensive. Okay, now how to select the strike, it is very much important. Okay, but it is important on the basis of trade you take. on the basis of trade you take. Okay, so let me show you how people take the trade and what are the options. Okay, that means which strike price they should choose. All right, so there are like normal intraday, then intraday scalping, then positional trade, positional or swing trade, you can see swing trade. All right, intraday, scalping and swing. So in intraday, okay, the traders take like 1, 2, 3, maybe 3 positions, okay, and maybe in same script or maybe in different script. Okay, so in same script the chances are like 1, 2 trades you will get. Okay, 1, 2 trades. So if they're like 5 script, okay, 5 to 6 script, let's just say 10 script. So out of 10 script you might get at least trade in 6 to 7 stocks. Okay, at least in 6 to 7 stocks. Okay, in your favor. All right. In scalping they take number of trades, huge number of trades. So in scalping you can see 3 to 4 trades. Okay, 3 to 4 trades. Same goes to positional trading also, swing trading also. If you have huge capital, then here you can take a number of trades on the basis of your risk appetite. Okay, so let's just say 5 to 6 trades. Okay, on the swing trading basis. All right. Now, what are the differences? And what are the differences between these trades? And then we will decide which option strike we should select, OTM or ITM. All right. So in intraday, see the intraday traders, they book their profit at the end of the day, like before 3:30 p.m. All right. So here the strike price is the option strike price is not it will not be considered as very much important. Okay, as very much important, because they will book their profit at the end of the day. So the option Greeks the effect of the option Greek will be lesser as compared to positional trading. But here also I am not saying that it is completely like it doesn't matter, but it matters on the basis of the profit you are making. Okay, so let's just say you are doing a scalping. Okay, so scalping, if the Nifty is moving to 50 points, okay, so at the ATM level when the delta is 0.5, okay, so you will get 25 points. So it is more than enough for a scalping trade. Okay, they usually get 5 to 10 points because they place huge quantity at that particular level. Okay, so but in scalping trader, since they are taking the huge quantities, so they will go slightly above the ATM level. It means if I am going to buy the call option, so 24850, so what I'll do, I'll go for 24900 or 24950. 24950, because here you can see the current price is 132, but at 24950 it is 90. So all you can see 40 rupees cheaper. So let's just say if I am going to buy 10,000 quantity, that means here the investment will be around 9 lakh rupees. Here the investment will be 13 lakh. Okay, that means you can see the 4 lakh more. But you can see here the delta is 0.3, here delta is 0.46. That means if Nifty is moving to 100 points, it will move 46 points. Okay, if you reduce it to 50, it will move 23 points, and it will move here the delta is 0.3, it will move only 17 points. Okay, so in that case you can see the scalper will be much satisfied here, because the 17 points is more than enough. And also in a scalping trade, most of the traders, they trade on the sideways when price moving like this. Okay, so for scalping, slightly above the ATM strike, it is generally considered as safe. Okay, generally considered as safe, and it will be much favorable for them. All right, for the scalpers. Now if I'll go for the normal intraday trading, then they should always go for the ATM. Here slight OTM I can say for scalping, slight OTM just. Okay, not deeper OTM, slight OTM which will be safe. Okay. Now for normal intraday, see in normal intraday, whenever I am taking the position, it is not my target. Okay, it is like my target will be achieved, might be in like 5 to 10 minutes, might be in half an hour, might be it will take more than 2 hours or maybe whole day, because many times stock doesn't move according to my will or our will. It moves according, it is moved according to the demand and supply. Okay, market is dynamic, it doesn't move according to anyone's will. Okay, so here in intraday, if I am going to select the ATM strike, okay, let's just say the market, is taking like 4 hours, okay, to reach that particular target. That means I am considering that Nifty might move like 150 points. Okay, 150. Let me erase all this. Okay, then it will be clear. Okay, I am considering intraday. Okay, let's just say you have bought at 24,850 strike. Okay, the price is 132. All right. Delta is 0.5. Let us consider delta is 0.5. Okay. Now I am into perception. Okay. According to my strategy, according to my studies, the Nifty might move to 25,000. Might move to 25,000. That means 150 points. Okay. 150 points difference. 150 points difference. Okay. So if Nifty is moving to 150 points, the delta is 0.5. Okay, so that means here I can get 75 points more. So 75 points will be my profit. So that means my profit will be 132 plus 75. Okay, 132 plus 75. It will come around 207. Okay. 207, that means the price option premium will move from 132 to 207. Okay, but there are other parameters. Okay, implied volatility and the theta. Okay, they will act in rigorous manner. Okay, so here if let's just say this trade has taken about 3 hours, or let's just say more than 1 hour. Okay, in more than 1 hour. So will I get this the same points, the same target? Then answer is no. Okay, might be slightly like below this particular level. Let's just say 207, not 207, 205, 204, 203. Okay, this is a possibility, because the option Greeks are acting at every point of second. Okay, so that is why it will affect the premium of the option. Okay, that is why I will get this much of profit. Okay, so while taking the intraday trade, okay, while taking the intraday trade, not scalpers, okay, normal intraday trade, you should always go for the ATM strike, because at the ATM strike the delta is good. Okay, the delta is good. Also theta is also reasonable, you can see. So that is why you will get the maximum profit. Now for intraday trade also, okay, for intraday trade also, one thing we should always consider is the expiry. Okay, because as soon as the expiry is near, even the ATM, okay, even the ATM delta is reducing, delta will reduce. Okay, so what we'll do, I'll go slightly ITM, okay, slightly ITM, basis on the profit you want to make. Okay, basis on the profit you want to make. So the traders, you should keep in your mind that how much profit you can make. Okay, so let's just say in 150 points, okay, let's just say this is your target. Whatever the targets you have, whatever the target you want to achieve or you have set, okay, on the basis of that, if the Nifty has moved to 150 points, Here on the basis of 0.5 delta, you will get 75 points. If you are happy in that, you should always consider that particular strike. If you are not happy with that, you want to achieve like more than 100 points in 150 points of 150 points Nifty move. So you should go for the ITM. You should go for the ITM. But as my experience, most of the traders should go for the ATM level. All right. So it depends on the expiry also. If the expiry is near, the price fluctuate more. Theta will act in a rigorous manner. Okay. Also delta will fluctuate. IV also fluctuate. Okay. So before taking the trade nearer to the expiry, you should always consider all these factors as a option buyer. Okay. So you see on the expiry, many times the stock, the Nifty is moving drastically up, and the option premium also moves up. Okay. But you can see if the Nifty is moving like this, okay, let's just say you have bought the ATM level of the ATM or the OTM of the strike. Okay, ATM, let's just consider. Even there is a slight red candle, okay, slight red on the expiry or before expiry. Let's just say if tomorrow is expiry, today I am taking the trade. Even there is a slight red, the price comes down drastically. So here you have to keep your target fixed, because the price will fluctuate, it will hit your target. Okay, so you have to keep your target fixed. Okay, here the trailing stop loss will trailing profit will be very much complicated. You can see it is difficult, right, on the expiry or before the expiry. So this is how you are going to take the trade in intraday. All right. So at intraday, always consider going for the ATM. All right. Now I am going for I want to go for the positional trading. Okay, I will go for the positional trading. Positional trading. All right. So first of all, for positional trading, we should never go for the naked option buying. Okay, even if you are very much brave heart, you want to take more risks, then you should always consider the ITM level. Always consider the ITM level, because in positional trading you are going to hold it for 1 week, maybe 10 days, maybe 1 month. Okay, so you should always go for the ITM strike, because as days passes, theta will increase. Okay, the time decay will increase, your premium will be reduced. Okay, so always go for the ITM while taking the trade in positional trading. Okay, now should I go for the Nifty, Bank Nifty? Absolutely no, because the ITM taking the positional trade in stock options will be much better, because the stock option is of monthly expiry. So time decay will be slow, okay, as compared to Nifty, Bank Nifty, because Nifty, Bank Nifty have a weekly expiry. All right. So if you are going to take the trade in Nifty, Bank Nifty, then you should consider taking monthly expiry. All right. But in Bank Nifty, since liquidity is more, the time decay happens at much faster rate as compared to stocks. Okay. So if you are going to take the positional trade, okay, go for the stock options. Go for the stock options if you are going to buy the naked options. Okay, but I don't recommend naked option for taking the positional trade. Always go with the option strategy. Option strategy. Where to find the option strategy? In the option architect. All right. You open Quantsapp, go to trading, strategy builder, option architect. All right. If you open option architect, just a minute. Yeah, option architect. If you have a view of bullish, you will get these various option strategies. If you have bearish, option strategy will be changed. Either way, that means it can go further, like down or the upside. You have no idea. You go with these strategies, and if you have idea that it might oscillate in between these two levels, then go for oscillate. Okay, so these are the option strategies. All right. Now let me show you that how ITM and OTM will affect your profitability. Okay, go to scan. trade recap. Okay, I'll go for new strategy. All right, new strategy. So in Nifty, so let me check just a minute. In Nifty, first I want to go for the chart. Okay, go for the chart. All right, today has moved down. Okay, let's just say I have taken the trade over here, put option. I have bought the put option at 25,100. Okay, so if I am going to take the take the option like put option of 24,950 and 25,100, which option will give me much more profit? Just take a look. Okay, new strategy. All right, so date, let's just say 9/15, date on 1st. Okay, it is taking much more time. Yeah, 25,000. Let's just say if I bought the put option over here. Okay, bought the put option over here. Okay, I am going to buy 2 lot. Save. Okay, now if I am going to buy some OTM level put option, 2 lot. Okay, now I will change by day. Okay, I'm sorry, I just selected the expiry wrong. Okay, no data is available since the expiry has changed. Okay, let me show you. Okay, put option 24,550. Okay, 25,100 level. Okay, and 24,900. Okay, the trade recap is not working. Okay, no problem. Let me show you how the price has moved. Okay, let me show you the price has moved. 25. I will select the option over here. Okay, I will select the option over here. Just a minute. AUG 24, okay, 25,100 put option. Okay, August put option. You can see the premium was around 160. Okay, let me consider as 180. Right now it is 400. Okay, now I'll just show you what will be the premium of 24,900. 24,900. Just a minute. Yeah, 24,900. You can see it was 100. It is 270. You can see the differences. This one is OTM strike and the previous one was ATM strike. Okay, so this is how the traders make the profit. This is how trader define the strategy and take the trade by considering the strike price. All right. So this is how you can take the you can choose the strikes on the basis of the strategies, on the basis of the trade setup, on the basis of the trading type, whether you are a intraday trader, scalper or positional trader. Okay. So this is all about choosing the strike, choosing the right option strike while taking the trade. This is Dharmendra Rajbar. Thank you very much.